Hi there, this video is supposed to um take last night, but I didn't. So I'm gonna take the video first, and then I move on to my regular chat, and I start doing my trading today. Last day, just I plan to plan to short the market, uh, and it wasn't worked. By the time it worked, I'm not execute any positions. I was scared to execute it. So first thing first, the last day, what happened? Go to daily time frame. I'm just gonna go to daily time frame and explain why I plan to short. So the plan is very simple, bro. This is the previous day candle, the big bullish candle, and as soon as price sweep the previous day low, it started to expand higher, and I anticipated the target gonna be this high, this, and this. I identified this is a fair value gap in daily and weekly bearish fair value gap inside the whole swing. This is a inversion, and this is a bearish fair value gap formed here in weekly and daily, and these are all the liquidity zones 1 2 3. But as soon as it's clear out this liquidity zone, I jump in and execute big lots. I execute my first lot, and I keep on adding position, and I managing it in a good way. But the thing is, the entry model which I executed last day is not a actual valid entry model. It's just an accumulation, manipulation, distribution. I got manipulated, and by the time it's distributed to the upside, I was not confident to execute the trade. I was scared. While 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 I was in the opposite direction, like I'm shorting, it's kind of printing a buy model, so I'm not comfortable taking that take the trade, but it's actually a really good trade. So the mistake is it's not a valid drawn liquidity. The valid drawn liquidity is supposed to be this. This is the liquidity which align with this fair value gap. So we can so the market is aggressively start buying to upside. So we can expect the market to reach this high. That was my mistake. The draw on liquidity which I marked, I anticipate that's going to be the draw on liquidity. That's where I can short the market aggressively. But unfortunately, I didn't. I wasn't. I just give more importance to this daily slash the previous day high, bro. That's the mistake that I did last day. So this is the daily time frame, and in 4 hour, it's pretty much the same. This is the moment which I got last day, like big displacement, and you can clearly see the major liquidity has been swept, and it's printed SM rates keep on going higher, and it's beautifully holding the inversion, beautifully holding the price, the last inversion. Then what happened? Yesterday, previous day low swept, instant displacement, flip this fair value gap. So obvious target is going to be this high. This is the previous day high. As soon as it's take this high, I was trying to attempt to short the market. The point is this and the news candle high, and now my planned weekly high under the fair value gap is right there. So price just expanding all the way towards that high. I know that good that sorry, that could be the draw on liquidity, but I'm not. Uh, I fail to give importance to that. That's the problem. So in 1 hour, what's happened right now? So in 1 hour, what happened last day? So this is the thing, bro. This is what happened. The previous day low has been swept, and it's flip all the fair value gaps. So obviously, already going to be this. So this is very short. The try to short the market. So what I missed last day. Yeah, it's not that simple, right? So weekly fair value gap. Just delete this fella. I don't want this. This is a weekly fair value gap plus weekly high, and this is the previous day high, and this is the previous day low and weekly low. This is what I marked last day, and as soon as price sweep the previous day low, as soon as price entered this range, the inversion range, it's keep on going higher, and it's literally flip all the bearish fair value gaps. So the obvious draw on the market is extremely bullish. So the obvious draw on liquidity going to be what the weekly high and the if it takes and it start to pumping up, which means it's going to reach the weekly high and the weekly sellers fair value gap. That's weekly and daily sellers fair value gap. That's my game plan. But as soon as price clears out this high, as soon as it print the market make a sell model, I was like, it's not give any sort of pullback. So I expect the pullback. So this is a valid pullback, right? So just forget that for now. So expect the pullback from here, but it did give the pullback from here. The problem is the key thing is here after this high, what happened, bro? It's literally print the fair value gap in 1 hour. I didn't notice that. That's a major mistake yesterday. After clear out this previous day high, it's formed a big bullish H1 fair value gap. If I saw that last day, most probably I'm not going to short the market. Why? I should wait for this value to flip in order to go for short. Otherwise, I should go for buy and targeting higher prices. That's my game plan. That's what I need to do. I confidently target this. But unfortunately, I didn't. I didn't notice that. I failed to notice that. That's a major issue. And it's exactly stopped at 50% level. And one more key thing, which I failed to notice yesterday. I noticed, but I didn't give importance to that. It's not a sweep actually. It's a candid close above. So previous day high break and displaced. So previous high, forget about break and displaced. Previous day high break and closed above, which means it's not a sweep. So we can't consider it as a sweep or short the market. This is the sweep. This is where the market, this is where the price gets stopped, and this is where the sweep happened. This is the clean sweep, clean liquidity sweep inside the fair value gap, the high. So one, two, three, four liquidity has been taken, and this is the fair value gap, and this is the weekly high. This is the high time frame fair value gap. Everything is aligned. This is where it start to give the retracement. Clean sweep, clean retracement, clean flip of the fair value gap. Once as soon as price swept the internal, the place which I anticipated last day, expecting the higher, not expecting, anticipated my target. Like this is what I target, bro. This is my target last day, but it turned exactly at the 50% level and go all the way up. Big push. And by the time it sprint the real sell model, I wasn't confident to execute the position. It was very what can I say? It's a quick flash. It's not putting any kind of market maker sell model in a proper way. It's kind of quick flash. It's in 1 minute. It's everything is clear just because it's not a structure. It's just a sweep and just go all the way up and close inside this range. It's a sweep. So the price action in 1 minute is pretty fast and pretty quick. So I confused myself with 5 minutes and 15 minutes fair value gap. Even though I get the 5 minute flip, I didn't enter. That's a major mistake for the day, the last day. You can clearly see this pullback. This is where the market gives a pullback. As soon as it sweep the low, enter this fair value gap, the second quadrant. It give again you can see again price stopped exactly at the 50% level. Sweep the internal liquidity, stopped exactly at the 50% level in 1 hour. Big displacement to the upside. So we can anticipate higher prices. Yeah, we can anticipate a higher prices at least to this point. What the price action, bro? This is 1 hour time frame. So this is the two pieces that I missed last day. This fair value gap and this 50% level and this candle close I noticed, but I failed to give importance to that. 15 minutes. Still the same. Liquidity sweep, inversion, this value of holding the price, keep on going higher. There is no pullback, nothing. Go on. There is some accumulation here, just accumulation. Beautiful expansion all the way towards the previous day high. As you can clearly see, it's not a sweep like this. It's just a clear candle close, which means price wanted to print higher. Previous day high break and closed above. It's a candle close, which means a clean, authentic breakout. So, and what happened next? Price accumulated here. It's not even any price action. You can't find any price action here. It's just an accumulation. 15 minutes. 1, 2, 3, 4, 5. Just 5 candle. It is a clean accumulation, manipulating to the downside. Um, let the sellers get into the market. I was one of them, obviously. So I consider it as a sweep, consider it as a structure shift, consider it as a flip. So it's in this location I was extremely short the market with very high lots and expecting lower prices at least to to the fair value gaps, at least to this levels, to 1:2, but it didn't. It stopped exactly at the 50% level. As you can clearly see, it's a clean, after break the level, it's clean accumulation, manipulation, distribution all the way up towards what? Towards weekly high. So one, two, three, fourth. After the fourth liquidity, price started reverse. This is the liquidity sweep. Price, you can clearly see this is not a sweep. This is the sweep. Price clearly stopped at before the daily high, and the next candle in 15 minutes just go all the way dig into the fair value gap under the weekly high and just closed below. Then what happened? It's literally flipped the fair value gap. So you can clearly see it's getting flipped. So you can enter the position here, put the stop. Whatever the position you can enter, you can anticipate the lower prices at least to 1:2, at least to this point. Because this is the this is, I clearly know this is kind of a quick flush to the upside, the manipulation leg, quick flush to the upside. So most probably this is going to be the draw on liquidity. If we find any models here, this is going to be the clean draw on liquidity. We anticipated this and this way of getting disrespected. That's what exactly happened. This they're getting disrespected, this getting flipped. Please clearly come to this level. Engineer the liquidity, swept one more time at what time? 4 o'clock. From 2 o'clock to 4 o'clock, it's accumulated here, swept, which means manipulated to the downside, clean sweep in 15 minutes, and structure shift, and it closed above. So obviously we can target some London high, Asia high kind of things. Good push to the upside, so still we can expect some higher prices if I'm not wrong. Yeah, that's what I did in last day. Like I manipulated in this move, but in 15 minutes it's actually nothing. I don't, it doesn't make any significant fair value, sorry, significant high, low, significant fair value gap. There is no displacement. If I get any displacement, if I get any fair value gap here in 15 minutes, then I could thought of shorting the market, and there is no clean sweep. This is the sweep. This is not a clean sweep. It's kind of engineer the liquidity. That's what I messed up. And in Euro USD, I didn't find anything like this, bro. I didn't find any good model. Even Euro USD, it's completely seems bullshit. So I guess just because it cleared out the previous day high, I created my own model high. That's the problem. Once I get the flip, I was super super manipulated. I was like getting super manipulated, so that's the problem. There's a 50 minutes. It's a candle close. It's a break above and closed accumulated manipulated distribution. That's it. And as soon as it's sweep, it's start to reverse the direction very quick, because the 1 hour you can clearly see the wick. It's all the whole push is just a wick. The whole push is just a wick, and that's the reason why it's worked. This kind of price action, most of them not happen. I'll explain it in 1 minute. So this is a very precise price action, very high quality price action. You can get good quality entry, but the thing is, you have to clearly recognize this kind of model, because the clean expansion move all the way towards the key level. Once the key level has been taken, which means once you take all the important levels, it's literally clears out. Literally, start to bleed down. Here's 5 minutes. You can clearly see in five. In if I can explain one more thing, bro. I just want to mark it out this 5 here, and I just want to almost 7:44. I have to go to my live market, bro. I don't want to sit here and doing the thing, because it's a very important thing, because it's a new lesson for me as well. I didn't knew that. And I when I review this trade in post market, in hindsight, it was like, holy fuck, bro. It's flipped. It's break the first quarter, like this is the 15 minutes time frame, right after the sweep. It's literally break the fair value gap. It's not stayed above, it's break, and it's found resistance around here. It's resistance found resistance around here. Final sweep, start to sell off to where? To this fair value gap. This is our target. Once it get flipped, this is our target. Once it get flipped, what happened? This is our clean target. That's it. Nothing more to talk. That is what I want to explain it to you. So 1 hour time frame, fair value gap, I didn't mark it, I didn't understand. I didn't mark it, and I didn't notice that. That's a very big issue, bro. How the hell I'm not noticed? I understand. I saw the candle close in 15 and 1 hour, but after that It's a 1 hour candle, like 30. Yeah, it's a 1 hour candle. After the 1 hour candle, I didn't move on to any other time frames. That's a major issue with me. By the time I was super aggressively short the market, but it's a kind of manipulation, like accumulation, manipulation, distribution. Holy fuck. This is what I did in 15 minutes. Sorry, 5 minutes. So 5 minutes, I was like, holy fuck, I expect the market to come at least to this point, so I can catch 1:2. I consider it as a sweep, which is a breaker, structure shift, and it's clear this imbalance, it's respected, it's flipped this five value gap, it's cleanly manipulated me, bro. Cleanly fucking manipulated me. Got my point? Liquidity sweep after the daily high, but it's not a sweep. Think about that. I knew that. Most of the time, I never consider it as a sweep. With the sweep should be like this. It's not actually a sweep. It's engineered the it's engineering the liquidity. But I consider it as a sweep, unfortunately. And once I get the structure shift, the big displacement, I was like, I can short the market, right? So I shorted here, I shorted here. Once I get the sweep, I shorted here, I shorted here, and I even shorted here. The reason behind that is simple. I understand the 5 minutes flip, 15 minutes flip, so I expected lower prices. My target was at least to this levels, like yeah, my target was at least to this level. But unfortunately, it didn't. It's just a clean accumulation, after the break of the daily high, accumulation, manipulation to the downside. Exactly at the 50 percentage level, it started to reverse its direction. It's kind of engineered the liquidity in order to hunt back like this. So it's kind of engineering the liquidity, and it start to use structure shift, boom, pull back, that low getting protected, and it's literally flipped this fellow and this fellow. This is where I should execute my position, because I identified that it's completely invalidated my model. By this time, it's completely invalidated my model, but the candle is very big, so I can't buy. I should buy here because I didn't notice this kind of things, but this is a clean volume. This is just an accumulation phases. This is the manipulation. This is the clean expansion mode or distribution mode. That's the reason why it's a strong candle after this structure shift, after this pullback, strong push, and it's a literally flip all the fair value gap. So I should enter, and you can clearly see inside the swing. There is a last fair value gap, and that last fair value gap acted as resistance. It's clearly hold the price. The next candle come and dip into that fair value gap and respected going all the way up, and we can clearly target. And I also marked this weekly high and weekly high and weekly fair value gap, right? So I can potentially target this. There is no pullback, go all the way up to that point. I have to clear out this news candle. It gives some reaction, but I don't find much of it. So this is a order block. It's a down close candle. It's respected the fair value gap holding the price. It's keep on going higher. As soon as price clears out the weekly high, as soon as price reaches the weekly high, this is the liquidity is go and grab the liquidity, instantly dump, come all the way down. This is the first value get flipped. This is the first value getting flipped, and it's getting flipped, go up, fail to close above, start to respect it all the way down towards the low, and 15 minutes value gap. You can clearly see the 15 minutes value clearly closed below, and it's engineered the liquidity go all the way up, and it's found and it's found resistance at the 50 percentage point. Final sweep, again a structure shift. It's keep on going lower. This low continuously getting protected until the final draw liquidity has been taken. So this is a quick push and quick flash to the downside. Usually I wait for this kind of price action, but this is very precise. Since this is just a not a manipulation. This is just a quick expansion move all the way towards this high. As soon as price clears, take this weekly thing and start to. Even if I'm scared to execute my position in 1 minute, I should execute my position in 5 minute flip. 5 minute flip, holding, sell off. I should execute my position here, put the stop at the high. That's what I should do. But since it was a 15 minutes time frame, I was scared to execute, but I didn't. I was scared to execute the position. But you can understand one more thing. The 15 percentage level clearly broke, and in 5 minutes, the fair value gap clearly get broke, go all the way up, found resistance at this point, keep on resisting, keep on resisting. engineer the liquidity, sweep one more time. I can understand the structure shift, everything in 1 minute. So I can execute my position as well. I could take this move. I could catch that move, but I didn't. In 1 minute, I will explain it even clear. So this is where I got manipulator. So accumulation phase, this clean accumulation phase, bro. This is not a valid model. This is a clean accumulation phase manipulation. Then it's expanding to the upside. I consider it as a liquidity sweep. It's not a model, bro. I just thought it was a model. I consider it was a model. I am the one just considered it. But it was not actually a model. Just because the previous day high taken doesn't mean it's going to go lower. You should wait for the major liquidity to take. Kind of you kind of generating the liquidity after that and the final sweep one more time. It's a clean sweep in 1 minute. So engineer the liquidity, after sweep the level, it's go all the way up, sweep. And as soon as price flip close below, I enter my position, put the stop at the high, at this high, and expected lower prices. As per my wish, gave the structure shift and it's rebalanced to that fair value gap breaker and it's respected, start to sell off. And one more time. So this is where I execute my first position, and this is where I execute my second position. And that's kind of not, I don't have any. If I execute my position here, it's good. So I execute my position here and here. And executed my last question here. I understand that this is a clean liquidity sweep. So until getting swept, it's cleanly engineered the liquidity lower, right? It's engineered the liquidity at the bottom, and it's a clean liquidity sweep. And as soon as this value are getting flipped, and execute my position, put the stop and put the entries here and change all my stop to this point. That is what I did correctly. That is what I did correctly. Yeah, it's cleanly engineered the liquidity and it also flipped this level here and it's also sweep the internal. So I was like, I still trust that model. In 1 minute, it makes sense, lot of sense to me. So I add more positions and put the stop at this high. So my initial position was was break even, and my final and this is the execution. This was the execution that I lost much last day, but rest of the things I'm not lose much out of it since I closed my position right here. This is my validation process since it sweep the internal. So since it flipped this value up, I don't like to see any place reach this point. I don't like to see any place reach this point. So that's the agreement. So I failed to change one or two stop losses. I was I was still in, anticipated the price to come lower, but it didn't. It's keep on going higher, flush all the way towards upside. So accumulation, manipulation, distribution again. So as soon as the weekly high and the weekly high taken, as soon as the price entered the weekly five value gap, what happened next? As soon as happened, the last high, it's kind of a quick flash, bro. It's kind of a quick flash. I expected the price to take one more time, price to reach one more time this high, but it didn't. It's kind of flashing all the way towards downside. So as you can clearly understand, this is a fair value gap that lost holding the price going up. This is a lost fair value gap. This is a lost swing low holding up, and this one more fair value gap holding sweep. This is the structure shift. Fair value gap flip very quick first, and it also not only flip but also create a fair value gap and the fair value getting respected. That's the first entry. This should be the first entry if I was super precise. Liquidity sweep, the last value that holding the price getting ran through structure shift. So I entered my first position, put the stop at the high very quick, very instant. And this value that holding the price no longer respected, get ran through. So if you don't want to consider this as a structure shift, so you can consider this as a structure shift. So this is a structure shift, and this is also a structure shift because this high taken structure shift, flip, value created, entered, put the stop at the high, expecting lower prices. That's it. And what happened next? Big flash to the downside, flip the 5 minutes, flip the 5 minutes fair value gaps, and I marked out the 15 minutes. The 15 minutes get clearly broke in the 50% of the level. So the price break the fair value gap, not respecting in the upper quadrant. It's break all the way down, and it's keep on going higher. It's kind of engineer the liquidity. It's kind of engineer the liquidity at the bottom and engineer the liquidity at the top. Exactly at that, exactly at the 50% level, not a random price. This is the expansion move. After the break, this is a good expansion move to the downside. It's literally flip all the fair value gaps And what happened? It's manipulated to the upside, bro. It's manipulated to the upside. It's boom, 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 and it's clearly engineering the liquidity at the top. It's engineered liquidity. It also engineered the liquidity at the top. One, two, three, fourth time it's getting swept. So you can clearly see the 50% level clearly act as resistance. Price failed to close above the 50% level of the 50 minutes fair value gap, and it's clearly act as resistance. As soon as it's give the final sweep, and as soon as it's give the structure shift, you should enter the position. If you're not scared, if you're scared to enter, you can enter inside the fair value gap as well and put the stop at this high and expecting lower prices at least to this level. That's what happened. So everything has been missed after that initial loss, because the initial loss I allocate a lot big positions. If I execute my position even in 5 minutes, it's great. So 5 minutes, according to 5 minutes, I should exit my position here, and I can add my positions like my prior entry. As soon as I identify the 50% level, as soon as I identify the liquidity sweep and the structure shift and it's holding, I can execute my positions here, add some positions here, put the stop at this side, move all the stop to this, move all the stop from that point to this point. So my initial entry should be um, riskless, and this entry is it can be at risk, and we can catch a good move out of it. So yeah, I didn't do that, but this is a good learning for me that day. After the split flush to the upside, how beautifully it's engineered the liquidity at both sides, bro. Liquidity, the final sweep. This is where I got the structure shift again. Fair value gap, flipped structure shift. We can start execute the position after the sweep this candle or else this candle. It's beautiful, and expecting the price to hold inside this range, and that's what exactly happened. And it's clear out the liquidity. That's it. And the major liquidity zone is this, and price did take that liquidity as well, because this is just an impulsive move to the upside just to take place of that ranges, and price keep on sell off to the through the whole night, and successfully reach this liquidity, engineer liquidity, the liquidity that engineered last day. It's taken today exactly at London session. That's what I learned last day, and I'm yeah happy for that. So we start trading the live trade. Sorry, yeah, we start doing our live trading. That's it. Have fun. I'm gonna post it right now, or else a bit later.